Welcome back to the Sense of Security podcast. I'm Cassidy Clement, Senior Manager of SEO and Content here at Interactive Brokers, and today I'm your host for the podcast. Our guest is Judith Casasampere. She is part of the institutional sales team at Interactive Brokers. South America contributes to the world economy in terms of natural resources, farming crops, and more. In this episode, we are going to explore the impacts and the landscapes that are associated with the countries. Welcome to the program, Judith.
Hello, good morning. How are you?
I'm great. So most people within IB will know you from our sales team, and then we'll know you also from our IBKR podcast in Spanish. But since this is your first episode on Sense of Security, why don't you tell our listeners a little bit about your background?
I've been at Interactive Brokers for over 20 years. I've been selling in Europe. I've been selling from here, from the United States into the South American markets. And I have also been preparing almost 40 episodes in the IBKR podcast in Spanish for our Spanish listeners and Spanish traders and Spanish investors, and that they want to know more about other things in the economy, especially as well from Jose Torres, that also intervenes with us every month about the data, economic data. But most of it has been a really a good experience to be able to work at IB. That gives me global exposure, and that's one of the most important things I like to talk about.
Essentially, this kind of spurred out of a lot of the hot topics in financial commentary news. Tariffs are a very hot topic right now. So are certain types of goods and services, the impact on other economy spending, and of course, the American economy spending. But today we're going to focus on the South American countries and their goods and services, what countries make up all of that larger economy. So what exactly are the main countries, if you could list them, that are part of the South American economy, and what are their main goods and services that they're providing to not only themselves, but the rest of the world?
So one of the most important economies in Latin America would be Mexico, followed by Brazil. And then besides that, these two main core countries, let's say, we will go then to Argentina, Chile. And then when it comes to the wealth management industry, then we would also add other economies, let's say Uruguay or even Panama. Costa Rica as well, it's an important economy, but it's more like maybe on the services side. On the production side, let's just speak it this way, we have Mexico, we have Brazil, and I did forget on purpose Colombia and Peru. Colombia and Peru are also important when it comes to obviously coffee, when it comes to agricultural products, but not that much when it comes to industrial type of products.
When we look at South America, there's going to be many different market profiles, many different, we'll say, styles of economics or the amount of wealth within the country or the different types of commodities that come out of these countries. What exactly are the areas that people look at South America for in terms of growth?
One of the most important things, obviously, from the countries in Latin America, it's other commodities, right? So most of the countries, starting with Brazil, which is, as we said, the largest producing economy in Latin America, and going to Mexico and all these other countries, there is everything from wood to oil, obviously, to metals, to even in Chile. And you wouldn't think about that if you wouldn't know, but all these minerals come from there. And there is a lot of obviously resources coming from Argentina, soy, corn, and all these type of agricultural commodities as well. So they are really important and really strong when it comes to all these natural resources. Also, they have been really favored in the sense that they have a really natural good path when it comes to the globalization, to have a closer contact with North America, with the US. So everything that has a shorter time to be produced in Latin America and delivered to the US easily. And in this situation, we can put Mexico and all the factories that obviously are there, that they are not actually based on the commodities. Their economy is now based totally on the industrialization portion of Mexico, sending all these produce to the US pre-tariffs. And now let's see what's going on with the tariffs being a part of the economy and a global economy, let's say.
Yeah, for sure. I think that a lot of other countries and we'll say day-to-day life items, coffee, fuel, different types of crops. Those things are really necessities for a lot of people. And it's coming into a different context now because most people, at least I'm speaking from the American perspective, are starting to realize, oh, flip over the package. Where is this actually coming from? It might be packaged in Kansas, but it's actually coming from Argentina or Colombia or something of that nature. Maybe from a initial perspective, as people are listening and with deductive reasoning, it's easy to say, okay, coffee. I know that people drink a lot of coffee. I can go and look for stocks that are associated with a Colombian coffee company. But what are some other ways that investors can start to see other securities that pertain to South America or ways of exposure to South America other than just direct stock?
Obviously, a lot of ETFs that are traded in the US that are focused on it in Latin America, and they invest on the strategic core, let's say, products that these countries are really producing. But obviously, also there is the AVRs, and the AVRs, for instance, are the US issued replicas of those strong stocks that are listed on the domestic stock exchanges that are in Mexico, in Brazil, in Chile. And so you can trade them in US dollars, you can trade them in the US exchanges with good enough liquidity, and you can get direct exposures to really powerful companies down in those Latin American countries. And I'm talking, for instance, about everything that comes from either Argentinian financial entities, let's say Brazilian entities on the financial sector, Bradesco or Petrobras, which is the oil company in Brazil. But we can go to also all these SQM, that is the mineral company that you said in Chile, or in the Mexico as well. So many other companies, let's say, that you can trade. And even interactive brokers that offer access as of today to even the Mexico market directly. And so you can trade it in pesos as well, or interactive brokers can receive money in Mexican pesos. But that is an exception. On the other countries in Latin America, you can trade them from the US markets.
When people are starting to look at a lot of this new exposure, we'll say, especially if they're new to, let's say, international type of investment, what are some things to keep in mind? Initially, I may think of geopolitics, but what are some other critical thinking points to think about before you just incorporate it into your strategy?
Most of these countries, their investments are made always on conservative types of assets. And when you think of all the population in those countries, they always say that they have already enough leverage on their own economies. Let's say their own economies are already on political swings, and they have really strong currency swings with regards to vis-a-vis the dollar. So therefore, whenever they look for investments, they look for investments that are mostly bonds, mostly mutual funds. They really are not looking for margin accounts and a lot of trading out on their accounts. Whenever these countries invest, they invest in a stronger currency, let's say dollars, and they invest on a more conservative type of styles of strategies mainly. Also, we have seen that usually, because of the disparities that Cassidy, you were mentioning before, there is a lot of wealthy clients. And then in between, there is also the people that work hard and then they save, but usually they save for their pensions or through pension plans. So again, it's a really stable type of investment. But then there is all the youngsters, and there is a lot of youngsters. There is a lot of good universities down in Latin America, and there is really good education coming out of all those countries. And those youngsters are participating through their universities on our student trading lab. We have a really good collaborations with universities in Argentina, in Mexico, in all the countries. And that they, even in Chile, that they do have, they train their students on how to invest and how to create good strategies. And those new generations, they do really want to have access directly to trading, and they do have more like an active trader mind.
Yeah, that element of almost a natural volatility within some of the local markets, as you said, drives more of an interest for a stronger conservative type of investment, or maybe more of an initial types of offering, maybe coinciding with other currencies. But from your experience, and because you follow the market a little closer than myself or people who are a little bit more looking at the US domestically, what are some trends you're seeing in the South American countries?
So there is a strategic industries, especially when we're talking about wealth again, and which is what I really encounter every day, right? So it's wealth managers and fund managers, but also especially advisors or brokerage houses. And these people can see strategically where they want the money from all these companies to be that they have excess liquidity because they are really doing well and they are selling a lot. And all these commodities companies that we were mentioning, they do have a lot of excess liquidity that they need to invest. So these investments flow, all of them, into the US. And this is a strategic industry, wealth management, advisory. It's becoming a really good industry. And all that has to do with model portfolios and investments of all those assets into the financial markets. So people want to be more and more getting yields out of their own financial assets. But having said that, what is really strong as well, it's all the private equity. And we haven't talked about that. But since these economies know that there is a lot of money that is invested on natural resources industries and all that, or infrastructure, for instance, right? That it's needed on these countries as well to keep on growing nicely in good terms. So there is a lot of investments as well that from their local people into all these projects because it produces as well a good substantial amount of yields as well on their investments.
The educational front at IB offer specific things like student trading lab. Are there other elements in the countries there that are starting to show, we'll say, a more easier access, less barriers to entry?
There is an important factor, which is the banks themselves. So the banks themselves are picturing for the clients the more these products that kind of make them lazy in terms of opening new resources on somewhere else, on a broker. And you have to have like a larger amount of assets for the end, let's say, client in Latin America to be getting exposure abroad, right? So people like regular people will not get exposure to international markets. The only thing that they would do, they would be converting to dollars. And that's mostly what they will do. And then they will keep the dollars where we don't know, but at least there. And actually, also the financial institutions charge large amounts on transferring money abroad. Thankfully, we have all these, you cannot say names, but all these companies that are like fintechs that are helping on that. So they are making the competition to the banks and they are helping at the end to the youngsters or to the people that want to really start getting out of the regular circuit and getting better investment to be able to get exposure to them as well.
Yeah, that's great. I think it's definitely positive to be able to level the playing field a little bit more, especially as the world's getting flatter and the internet allowing most people to gain access to learning about all different types of personal finance and more of a financial freedom, if you will, to start to expose yourself to other types of international investments. It's definitely a positive thing. So thanks for coming on today, Judith.
Thank you very much for your interest in Latin American countries and looking forward to see you again. Thank you very much.
Yeah, of course. As always, listeners can learn more about an array of financial topics for free at interactivebrokers.com/campus. Follow us on your favorite podcast network and feel free to leave us a rating or review. Thanks for listening, everyone.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, those references do not constitute a recommendation by IBKR to buy, sell or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.